In the investing community over the last couple years, there hasn't been an ETF more popular than SCHD, and for good reason. SCHD has been crushing even the S&P 500 and was producing a dividend that was double that of the S&P 500. But recently, SCHD has not been performing very well, and a lot of people are getting very skeptical and are thinking that maybe we're in a little bit of a bubble. It's possible that all this hype made it too good to be true. Well, my friend Tony asked if Ryan Williams and I would do a video on possibly the negative aspects of SCHD since everybody keeps talking about only the positive. And I thought that was a great idea, ran that by Ryan, and he was super stoked. And if you guys haven't checked out Ryan's channel yet, you guys are missing out, especially if you want to learn more about dividends. So I'm going to link to his channel down below, and after this video, definitely go check that out. And for those of you that don't know me, my name is Nolan Govea. My students call me Professor G, and I made this channel to make investing simplified. Now let's get Ryan on the channel and start talking about SCHD. Thanks so much for joining us. How you doing today?
Man, I am living the dream. How are you doing?
I'm good, man. I'm good. Just happy to see you here. That's what we're all here for real.
Likewise, man.
Obviously, SCHD down for the year. I think a lot of people's worst nightmares are coming to fruition, and we need to have a conversation. SCHD is down about 6.5% year to date. The S&P 500 is actually up 2.83% year to date. SCHD may actually not be as strong as we initially thought. There's a lot of concerns of possible bubble situation. With the banking failures recently, it looks like SCHD might be in real trouble. I wanted to get a true dividend connoisseur on the channel to see what he's thinking about all this. So Ryan, thanks so much for joining us. Could you let my followers and the people watching this channel know a little bit about what it is that you do?
Yeah, well, I am a diehard dividend investor. I've been doing it for not too long, I think I'm in my fourth year now, and that's really all we talk about on my YouTube channel. It's all dividend stock investing. I'm sharing portfolio updates, sharing what dividend income I'm bringing in. We're talking about discounted dividend stocks, anything and everything that has to do with dividend investing. We got it going on my channel. So, and you guys get to listen to my gibberish, which is just like a bonus. So definitely check it out.
No, that's what I tune in for, bro.
Yeah, all right.
Very good. Well, yeah, I mean, there is a lot of, just volatility in the market right now. A lot of people are scared. And so I think that's why they're tuning into this video here. And so later on in the video, I'm actually going to ask you maybe like one piece of advice that you may have just in general for investors. So everyone just make sure you stick around till the end for that. I think we're both going to go over something like that. But for now, let's go over SCHD and some of the concerns a lot of people are having right now. One of the big ones that I'm hearing, SCHD is doing bad while other ETFs are seemingly doing good this year. So year to date, some of these ETFs are down, but maybe not down as much as SCHD. What do you think about all of that?
I honestly don't pay too much attention to it, especially, I think the timeline we've kind of talked about so far is year to date. So, if something's not doing too hot for the first 2.5 months of the year, I'm not sweating about it. Especially for us dividend investors, when getting into this, you have a long time horizon. We're talking usually 20 years, 25, 30, sometimes 40 years down the road. And so when you zoom out and look at it from a long-term perspective, what's happening in a 2.5 month time window is really not that big of a deal. And SCHD is not the only fund that's down. I can tell you, like most of my portfolio is in the red so far this year, but this can actually be a good thing for reasons I'm sure we'll get into at some point in the video.
Yeah, definitely. And I'm glad to hear you say that because that's some of the things that I think about as well. For reference, SCHG, which is the growth fund over at Schwab, they're actually up 12% for the year to date. VU, S&P 500, is up almost 3%, but year to date is misleading. It's like what you just said. Like you're talking about 2.5 months. We cannot just look at something and go, okay, based off of this, that makes it a good fund, because when you just zoom out to 1 year, if you're looking at, you'll see that even though SCHG's up 12% year to date, it's actually down 15% for the year in total. When you zoom out and click the 1 year for SCHD, it's only down 10%, which is doing much better overall. So if you just expand your time horizon a little bit, right? And like you were talking about, for any of us long-term investors, 1 year is not long term. 1 year is short term. But that's the thing that I encourage people, especially on my channel, zoom out, look at 5 years, look at 10 years, because that's how long we're going to be investing, right?
In the last 10 years, I think SCHD has been around since 2000, either 2010 or 2012, somewhere in there.
Yeah.
I mean, in that time, it's exceeded the performance of the S&P by quite a bit. And that's not to say that that's going to be the case forever.
Right.
But I think it's important to take that into account. And that's another reason or example as to why it's important to zoom out and look at things across a longer period of time and not just what's going on right now in the immediate.
Definitely. Such a good point. Thank you. Yes. The next one that I am hearing, and I'm hearing it way too much, but I would love to hear what you have to say. SCHD is a bubble, right? Everyone, I mean, it seems like everyone is saying, well, the only reason SCHD is doing good is because it's popular, because people like you and I are talking about it. It's the new it girl of the finance investing space, right? And so there's really no merit to it. It's just that it's so popular. What do you think about that?
Well, let's think about why it is popular. And it is the new it girl of especially the dividend investing community. You can go on YouTube. There are guaranteed you'll see 1 or 2 SCHD videos pop up on your browse page, on your homepage. Like SCHD is everywhere. It is the most talked about fund, probably the most talked about stock in general right now across the entire market. But for good reason. Like, think about why SCHD is so popular. I mean, not only do you get the market beating performance, kind of like we've talked about how it's beat the S&P 500, but you also get some really solid dividend stats. I don't know their exact yield off the top of my head. It's in the 3s, and their 5-year dividend growth rate is not nothing either, double digits. And they've been growing that dividend ever since inception, 10, 12 years ago, whatever it was. Yeah. And so not only are you benefiting from really solid share price performance since inception, but really solid dividend stats that grow every single year. And furthermore, when you dive deeper into the hood, you'll understand how they're able to do this. It's the companies that make up the fund and the overall strategy. I mean, I think there's somewhere just north of 100 different companies within SCHD, which is a pretty, that's a lot of diversification. That's a lot of companies. And they set some pretty stringent rules for these companies to be a part of the fund. Like, you have to be in a good financial position. You have to pay dividends consistently for 10 years. And when you start narrowing it down and looking at what companies meet that criteria, we're talking about like Coca-Cola. We're talking about Pepsi. We're talking Verizon, IBM. We're talking tons and tons of different household names, and then 95 other ones that are all, rock solid. I think Snap-on's in there, Lockheed Martin. So you name it, man.
The thing that I like to point people back to, right, is the idea of this bubble, right? Because at the end of the day, what they're basically saying is that the share price, the price of SCHD, is not worth the value of SCHD, right? It's just being propped up. It just keeps growing, but it's not actually worth that. And the only reason that it keeps going up is because a bunch of people are buying it. But at the end of the day, the way an ETF is structured is it's just mirroring an index. It's just following an index. And even within the index is just literally taking the values of the companies. That's what it's tracking, right? And so the idea is that when there's a bubble involved, it just means that something's being artificially propped up that's worth way more than the value of its underlying assets. But in essence, like, the way an ETF is built is just built off of its underlying assets. So the underlying assets themselves, maybe 1 or 2 of those companies is being propped up, and maybe 2 of those companies is being outbid or, propped up just because of growth metrics or whatever, but definitely not 100 of them. And so that's the thing. When you just talked about diversification, you're rarely going to be able to see a bubble within an ETF itself because of all the diversification. So yeah, I mean, as far as bubble is concerned, that's not the correct word. And I keep hearing like, is this an actual bubble? I can understand people saying like, okay, it just seems like it has too much hype. And, maybe that's a concern. But as far as bubble, as far as literally, is it worth? Is the value there? You have to look at the underlying assets. And looking at the underlying assets, the value's obviously there. So the third thing that I keep getting, and I'm sure you're getting this one as well, is why even invest in SCHD right now? It only produces about a 3.5% dividend, where I can get that same or more at a high yield savings account, which is federally insured.
Why something like SCHD when you can get the same yield in a high yield savings account? I mean, that's a good question. I think it comes back to risk. because there's certainly going to be more risk investing in any sort of fund or stock than there is a high yield savings account. But the benefit from investing in like a fund like SCHD is the yields might be the same or similar, but with SCHD, you're also benefiting from long-term share price appreciation, which you will not get in a high yield savings account. And you also benefit from dividend growth, which, like we talked about earlier, SCHD's 5-year dividend growth rate is, I think it's somewhere between 12 to 15%.
Yeah.
So those are two additional ways to benefit that you don't get from a high yield savings account. You just basically deposit your money and you get interest. If you have $100,000, you'll get 3.5%, which is fine. But it just won't grow. All you're getting is that one dimension of interest from the yield, but you get that and then some with SCHD. Excuse me, tripping over my words there at the end.
No, yeah, that's great. And that's honestly exactly what I was thinking, right? Whenever I hear this question, in my mind, it's the difference between short-term thinking and long-term thinking, right? Like, okay, yes, if we're going apples to apples and we're going to say, in 1 year, what's the best investment for just a 1-year time domain? Maybe it is better to go with something that is, 100% gonna happen. You're gonna get this 3 or 4% or whatever in a high yield savings account. 1 year, cool. But we're really not ever talking about 1 year, right? And so the whole thing that I look at is, okay, the market's down 10%, 15%, 20%. To me, if you look at any historical chart, yes, we go down through some down periods and then we hit right back up and exceed that. So for me, I'm looking at it like we're down 20%. At some point, we're going to come right back to that. You can make 20% on your money by putting that invested in that way instead. So for me, again, it's exactly what you said, which is risk versus reward. Like, where is your head at? What do you need? What do you want? If you're looking to invest longer than a year and really longer than 5 years, I really don't see why right now is not the time that you're really throwing that capital in where it can make you some money long term.
Absolutely, man. Like I know a lot of us in the dividend investing community, we're looking at what's going on right now in the market where there's a lot of stocks going down. And it's like Christmas. It's like we're excited about it because the dividend doesn't change. The dividend stays the same. All that happens is you're able to buy these cash flowing assets for less today than you were yesterday. It's like going to buy a house. It's the same house, but instead of having to pay $300,000 for it, you're getting it for $220,000. So yeah. That's, who wouldn't want that?
Definitely. And so for those of you that are out there that you are choosing and you'd rather just put your money into a high yield savings account or a money market or something, honestly, that's great. If you even have money that you're able to allocate to a certain place, that's amazing. You're doing better than 90% of people. You're blessed. You have some extra money to do something with. So we're definitely not saying it's wrong. We're just also advocating for, you might actually, want to do a little more research and see how market cycles work. And right now we're just in a bear market, and eventually we will get out of that, just like we have numerous times before. And so with all that, Ryan, I do have 2 questions for you. The first one is, with all that information and just kind of where we are, like, negatively as far as economically, has this changed your thoughts as far as like investing, specifically in SCHD, but also just dividend investing in general? Has it?
No, I wouldn't say so. I will say I wasn't investing in 2007, 2008. I don't know what it felt like to go through that. And so if things really, really head south right now, this will be my first time experiencing a crazy amount of turbulence in the market. And it'll be interesting to see what that feels like going through it. But for now, like, this doesn't change things for me. No matter what the market is doing, whether it's going up or whether it's going down, I'm still buying stocks every single week. Is like Warren Buffett, who's a net buyer of stocks. I'm a net buyer as well. And so if you're a net buyer and you plan to buy and hold the stocks that you're looking at purchasing, it just makes more sense, and it's better to buy them at a cheaper price. Why would you want to pay more for them? And so no, this doesn't change things for me. And in fact, as the market keeps heading south, I'm going to try and allocate some more funds to invest even more to really try and take advantage of this if I can. And SCHD will certainly be receiving some of those funds. Just so you guys know too, I personally invest every single week into SCHD. It makes up, I think, 50% of my Roth IRA. So every single week I'm feeding that bad boy and building up those shares and reinvesting those dividends. And I know just by sticking to a plan, by staying disciplined and having a strategy, 20 years down the road, 30 years down the road, like will definitely be thanking myself for doing that. And it's not always easy. Like, it's not easy seeing your stocks go down in share price. That's also why it's important to invest in good companies, which I think the bulk of which is made up in SCHD.
I totally agree with that. And I'm glad that you said that. My buying behavior right now is actually higher than it was last year. I've put more money into stocks, specifically ETFs. I'm pretty much staying within ETFs right now, but specifically SCHD is one of my top holdings for sure. And last week I dumped a good amount in there just when it hit that banking dip there. So I'm the same, definitely the same there. I know I said I had 2 questions. I actually have 3. So that was the first one. Second question would be, what's your favorite reason to invest in a SCHD long term? What's your favorite reason?
If I had to pick one, it would be just the dividend. I think the dividend stats are really strong. Nice starting yield, really crazy high dividend growth rate. And if you're someone who has a longer time horizon, that's something you're looking for. You want to see your dividends per share increasing on an annual basis. That's a sign of like a successful strategy, I think. If a company or a group of companies, in the case of this fund, are able to consistently increase their dividends, that just indicates strong fundamentals, strong financials. And those are the type of companies you want to invest in. And so I think the dividend stats are my favorite part about it. But because the dividend stats are indicative of a solid strategy and solid underlying assets. Just last thing, I really think, and maybe this will change in the future because SCHD has only been around for the last 10 years or so, but it really does seem to be like the holy grail of dividend ETFs, because you've got your share price performance, you've got returns there, you've got the nice dividend stats we talked about, and you've got diversification. I really think and this is the case with a lot of ETFs, but just based on all that, I really think you could build an entire portfolio just around SCHD. Like 100 different companies, that's pretty well diversified.
I think that the fact that you and I really have grown up where ETFs are normal. Back in the day when they didn't have these things called ETFs, when they were saying to diversify, they were saying, have 10 or 20 stocks and you'll be pretty diversified, 20 and 25. Now we're seeing, ones with hundreds and thousands. And I think 100 solid companies, in any way you slice it, is pretty diversified and pretty strong. So I agree with you there. For me, my favorite aspect of SCHD is exactly what you said, which is more so the dividend growth, like specifically. The fact that for the past 10 years, they have grown their dividend and they continue to have a consecutive dividend growth rate, which is just, it's not normal. It's not something that many ETFs can say. It's not something that many companies can even say. That's why there's a list of dividend kings and dividend aristocrats, and it's a very small list compared to how many companies there are. And so for an ETF to consecutively increase their dividend is so big, because that doesn't just mean that, the share price itself is going to appreciate over time, hopefully. It also means that with that, you're going to get a higher dividend as well. That's double dipping. That's the cheat code. That's not fair. That's exactly the type of ETF I want to be investing in.
Absolutely, man. I couldn't agree more. And the last thing that we really haven't talked about with SCHD, which is another one of their pros, is the expense ratio. Obviously, everything it almost sounds too good to be true, but there is a cost to owning SCHD, and that's the expense ratio. Just the fees you have to pay to keep the fund running, to pay the fund managers to oversee the whole thing, all that jazz. But SCHD's is as low as it gets. It's 0.06%, which means for every $10,000 you have invested in this fund, you're only paying $6. You're only paying $6 in expenses every single year. That's nothing. So if that's, as far as I can see so far, like that's the only downside to this ETF. And if that's it, then that's a pretty sweet deal.
That's a great point. And last thing I want to ask you is what I alluded to before. Just overall, I think people watching this video just in general, and people watching a couple of, the videos you and I make, part of their reasoning for that is because right now the market's pretty volatile. Emotions are running high. Banks are failing. There's a lot going on, right? So if you had one piece of advice maybe, or a tip or something, just for investors in general, just a general investing advice, maybe specifically for this time, what's something that maybe you could offer?
Stay the course, guys. Like Nolan said earlier, times like this in the market where there is a lot of volatility and it seems like the sky is falling, those are when the greatest opportunities are found. And if you're able to buy these stocks at a discount, or these funds, these ETFs at a discount, because you have a long-term perspective down the road, it's really going to pay off. And so if there's any one piece of advice, it's just stay the course, keep buying, stay disciplined, and stay in the market too. Some people get so spooked when they see stock prices go down, they pull their money out completely, but that's the exact opposite thing you want to do. Buy more, and buy good companies, a lot of which you can find in SCHD like we've covered. So guys, just keep at it.
I love that, man. And I absolutely can't beat that advice. So I'm going to just second that for sure. And that, I mean, literally word for word was in my head, but I guess I'll go a different route and just say, right now, if you're scared, if you're worried, do what you can to help your mental health, and maybe just understand that it's normal. It's okay to feel these ways. And maybe you might just need to add a little bit more to your savings account, or maybe you might need to worry about paying down some debts, because maybe you're worried about something that might not be sustainable. And so instead of you worrying too much about how you can invest more, maybe take some of those negatives out of the way, and then that'll make it so that it doesn't seem so, I don't know, so tough to invest. So I think Ryan was presupposing that you're already doing that, and that's what I do too. But I think that, just a piece of reminder here, since Ryan already said everything perfectly in the investing world. If you can get more money in a savings account just so that you have, one more month's worth of living expenses there, I've just seen, for me, that was something that really helped my brain be able to continue to invest. So that would be my thought.
Yeah, dude, perfectly said. I couldn't agree more there.
Cool. Well, thank you so much for joining us, Ryan. And everyone, if you have any other questions, throw them down in the comment section below. And if not, we'll see you on the next one.
Yeah, thanks for having me, man.
You're welcome. Bye.